Welcome back, and you're watching Commodity Champions. Well, the monsoons have arrived, and as per the Met Department, rainfall is at 104% for the month of June, which is above normal levels. A better than expected monsoon means bumper harvest, but the cascading effect of that is seen on the agriculture commodity prices, and sugar is among the worst hit. Prices in the domestic markets are trading at a 6-month lows, while the global prices are at a 16-month lows as well. The sugar companies as well are feeling the heat with surplus production vis-a-vis a lower demand as the markets have put out. It also is about the destocking ahead of the GST rollout, which is impacting the industry. Joining us to discuss that and more is Narendra Murkumbi, who's VC and Managing Director of Shree Renuka Sugars. Mr. Murkumbi, hi, it's a pleasure to have you, sir. First of all, what is your sense on the GST impact? There have been some industry associations who actually have gone out protesting it, putting in presentations as well. How are you looking at the maths as of now? What is the industry paying right now, and what does the 5% means?
Good evening, Manisha. For manufacturers of sugar, I think on the whole it is positive. We are going to, the purchase tax which various state governments were charging will no longer be applicable. The 5% duty is in line with other food staple items. And overall, you know, it is positive compared to the previous regime where we had a small excise duty, but we also had a cess. And the cess you couldn't take input credit for. So this overall will be good. It will be good for industrial users of sugar also, because they can take full 5% credit, input credit on the GST. We have an issue with the very high GST rate for molasses, which has been fixed at 28%, and the rate on ethanol, which is 18%. But coming back to sugar, the main issue right now with demand is not so much the monsoon or anything else, but the fact that a large part of the trading chain in sugar historically never had VAT registration, because there is no VAT for sugar in most states in the country. So they are not used to a regime where they have to file all these returns and take input credit, etc. So I think there is a big changeover in the way sugar is going to be traded. And therefore currently people are destocking before 30th June, and that is having obviously a negative effect on the spot price. But having said that, I see a very, very tight pipeline on 30th of June, and we should see good buying from the 1st of July.
Mr. Murkumbi, what is your sense? I mean, when you talk about this transition here, what are the teething problems that you would see here? As you said, not too many people perhaps are going to be registered. There's a lot of testing of waters that is going to happen. How long before you see the industry actually come back to normal post 1st of July?
Well, that's the question we are all asking ourselves. I think it depends on how smooth the rollout is post 30th June. But having said that, I think people are gearing up to adapt to the new system. It's just that people are avoiding the extra complication of carrying over input tax credits or taxes from the old system to the new system. The sugar cess is a large portion of the current tax on sugar, and there is no clarity on whether that can be availed as a credit from 1st of July. So obviously nobody wants to be left holding sugar inventories, you know, during the transition period.
Let's talk about the kind of decline that we have seen in prices. One, of course, is, as you mentioned, it has been destocking ahead of GST. Nobody wants to be carrying too much stock. But what is the sense on the output as well? Because this season, while, of course, we are just about looking at 20 million tons, the expectation for the next season is on the higher side. The global cues as well are on the weaker side. Going forward, how are you looking at the prices moving?
So I am not pessimistic for next year. Firstly, I think it's too early to call the monsoon. For sugar production, the key areas for production are Maharashtra, North Karnataka and Uttar Pradesh. And I think at the end of June it's too early to call whether this is a good or bad monsoon. The second thing is, in sugarcane, the planted area is already known for the coming year. And we are going to have increase in production for sure, but it is going to be in line with next year's consumption. So I don't see the current tight balance situation that we have between supply and demand will continue for at least one more year. So looking at that, I don't really see any scope for bearishness on the domestic sugar price. Of course, the world sugar price has taken quite a tumble in line with other agriculture commodities, and following cues from bellwether commodities like crude oil, etc., which have fallen significantly in the last couple of months. There is considerable amount of short speculative activity also in all commodities. So that is currently weighing on the global sugar price. But the domestic market is insulated, and the domestic market supply demand balance is tight. Basis planted acreage for the coming season, we see a balanced supply demand situation around 25 million tons.
How are you looking at the recent increase in FRP, and how has the industry reacted to that? And also the fact that the latest arrear numbers are again out. Whatever that is not paid to the farmers beyond 14 days is now constituted as arrears, and those numbers still stand tall.
Well, I think firstly, FRP increase, is not a good thing. It shouldn't have happened. I think sugarcane is already very competitive compared to other crops. In our opinion, the cost of production is more than adequately covered by the current FRP. And since the revenue sharing formula has been implemented in major sugar producing states like Maharashtra and Karnataka, there probably is no more reason now or logic to have an increase in FRP year after year. So I am hoping that in coming years it would be left flat and let the revenue sharing formula take over in full measure. Having said that, the current prices of sugar more than adequately cover the increased FRP that has been announced for the coming season.
I want to bring you back to the fact on GST, and as you said, while on sugar you are quite okay and the industry is as well, it is really the ethanol and molasses which perhaps does bear a burden onto the industry. What is your sense on that? Are you planning to make that presentation to the government, or is there any movement in that part?
So, fuel ethanol is a green fuel, and it is being mixed with petrol, and petrol is out of the new GST system. The old taxation system prevails. So the oil marketing companies who are our buyers or customers, they are not able to take tax credit on the ethanol portion of the GST, means the GST portion on ethanol. So I think the industry is representing on that point. But other than that, I think on the main product sugar, it is more or less positive, and the fact that purchase tax is no longer applicable is a positive impact of about between 3 and 5% from state to state.
What is your sense on the prices going forward? I mean, you said you're not bearish, but you haven't given us a number, though. Is there a range that you are working with in sense of the sugar prices? How much will the global cues be impacting the sugar prices in India as well? And the kind of steps or measures that the government had taken when the prices were moving higher, do you see a need of that to continue?
So I think once we get over these teething problems with the GST and we move into the festival season, August, September, October, we should see an increase of price around 2 rupees, and then from November onwards we should come back to prices which are at the current level, more or less.
Also, my second part of the question, do you see the government measures actually go away after the GST teething problems are done with?
Sorry, which government measures, Manisha?
The imports, the stock limits, do you see that really going away?
Yeah, it's been so long since we had stop limits, it's become part of life. But yes, I would hope that there is no need for stop limits after Diwali.
All right, Mr. Murkumbi, we will let you go at that. Thank you so much for joining us. Well, that's the view coming in from the industry then, that GST on sugar really is no issue, stands in line with what the industry is paying in sense of taxes right now. But it is about molasses and ethanol that they would want to make presentations. As far as the sugar prices go, well, you might see actually some gain coming in for the prices in the next quarter until Diwali. That is the time, of course, when the sweetener actually sees a lot of demand. But with that, it's a wrap up on this edition of Commodity Champions. Thank you for watching.